Welcome back. Well, Everstone Capital is a homegrown domestic private equity firm with a presence in Southeast Asia as well. Over the past 7 years, the firm, which has around 80% of its investments in IT and healthcare, has made investments of $1.3 billion in various healthcare companies. To talk more about its investments, the current environment, we have with us the company's MD, Arjun Oberoi, and Head Private Equity India, Puncham Mukim. Arjun as well as Puncham, welcome to the show. Well, Puncham, let's start this conversation with you. You've invested around $1.3 billion in various healthcare companies. None of them are listed and none of them have seen, an IPO route till now, but very different investment routes. For example, one has been within the hospital space, and then we have others which are in the medical technology space. Give us a sense in terms of the key themes that Everstone is picking out when it comes to its healthcare investments.
Sure. Thanks, Ekta. Firstly, when we speak of healthcare, these are multiple segments within a segment. We have hospitals, we have diagnostics, we have pharma, and we have med devices, and then we also have nutraceuticals. And over the last 7 years, we've invested a lot of money behind multiple of these themes, right? So, and we've pretty much played every node of what we call healthcare. We've invested in a hospital business called Sahyadri Hospitals. That was a big theme we have been playing. We continue to be bullish on the multi-speciality healthcare services space, given the macro is extremely favorable in the hospital industry right now. And as you've seen, the performance, even in the public markets for some of these businesses has been superlative. We've also invested in the what we call the India-US corridor, where we've bought into generic manufacturing businesses and R&D businesses with low-cost manufacturing, strong R&D, and complex generic development skills, exporting products out of India into the US and European markets. We played med devices with two of our investments in Translumina and Everlife. And we've also played nutraceuticals in an investment we made in a nutra ingredient manufacturer called OmniActive. So very diverse spectrum of investments and a lot of capital deployed behind these themes. In fact, close to 45% of our last two funds have been deployed in healthcare. We haven't taken any of these businesses public. Public markets have sort of have been very, very robust over the last couple of years. But we've generally sold most of our businesses to other private equity firms and sometimes to strategics. However, having said that, we are sort of evaluating taking a couple of our portfolio positions right now to the public markets, but we'll see where that goes over the next 12 months. Something that we are working on right now.
Okay, let's get in Arjun Oberoi in the conversation as well. Arjun, as Puncham was just mentioning, that hospital space, the macros are looking really good, and you're invested across segments or verticals in the healthcare segment. What is it that is looking interesting right now? Anything apart from the themes that Puncham just spoke about that could be in the pipeline going forward for Everstone?
Yeah, look, I think the way we look at investments is, the biggest issue in India and Southeast Asia is addressing infrastructure and access gaps to affordable quality healthcare. So we continue to really like the specialty, the tertiary and quaternary multi-specialty hospital space. But then again, we're also serving in the US and Europe. We're also addressing the high cost of healthcare issue, which is why CDMOs, contract development and manufacturing organizations that have specialized capabilities, either in API synthesis or in formulations. So rather than looking at bog standard oral solid dose formulation companies, of which there are a dime a dozen, we are very selective about specialized capabilities that India has to serve the US and Western markets, which is why many of the themes that we have invested in the last 6 or 7 years continue to be relevant. In India, it's largely a service play around multi-specialty hospitals, as Puncham said. And the cross-border thesis is really leveraging India's capabilities in R&D and manufacturing, specialized capabilities to serve the US pharma nutraceutical markets. One theme that has become very apparent to us also in the past decade is the emergence of the medical device sector in India. I would say a decade ago, there were very few companies of scale and quality, and much of the medical devices were imported from the US, Europe, Japan, and China. Today, a thriving medical device industry has emerged, and we have been very much at the forefront of this. Two of our largest investments in Fund 3 have been in the medtech sector, one covering clinical diagnostics and life sciences, a company called Everlife, which has now emerged as the leading laboratory solutions business across India and Southeast Asia. And the other one, a business called Translumina, which has emerged as India's leading cardiovascular stent and devices company.
Okay, Arjun,
And by the way, on the public market story, we're thinking quite seriously about an IPO possibility for both of these assets.
Okay, Arjun, I just wanted to quickly narrow down on the hospital space, because you said that you're quite interested. You have investments in Sahyadri hospitals as well. One, is there any kind of slowdown in terms of the private equity interest simply because there is this concern with regards to regulation of rates from the Supreme Court, which is still pending as an issue and could be an overhang? And two, are there as many assets available in the hospital space as much as they were, say, in 2023 and 2022?
I think it's probably best if Puncham takes this one.
Okay, sure. Puncham, over to you.
Thanks, Arjun. Look, I think there is some overhang on price controls, etc. But as we look through assets, one important theme for us has been to buy into workhorse models, right? That provides access to all. Sahyadri was an example of one such investment, right? So, as we evaluate assets, we see where pricing is versus where market is, right? So, and that can be across different specialities. There is that overhang, but our view right now is that doing something of what is being propagated around would kill private investment in the sector, right? So there will be rationality because there is criticality of the private sector to continue to play its role, especially investments going out to build capacity in tier 2, tier 3 markets, right? So unlikely, that gets hit. And we've seen the government being very rational in terms of implementing various social security schemes across the healthcare space as well. As far as the question around availability of assets, you're right. This is a space that is consolidating, and that is driven by the need for underlying real estate, right? And greenfields take a lot of time to build out. Or inorganic has been a way to play for most of the chains, especially the ones now that are listed at reasonably robust multiples. This is the way to also fuel growth. So having said that, there are a lot of regional chains around that continue to do well and scale, and our focus will be around that, similar to what it was with Sahyadri Hospitals, which was a regional chain in Pune and Nasik. And we continue to focus on regional markets and are very catchment focused as we evaluate businesses.
All right. Well, quickly, Arjun, just wanted your thoughts on the medical devices space. You did mention that two of your biggest investments or two of your recent investments are within that space, could go down the IPO route. We still import majority of our medical devices as a country, around 60, 70 odd %. And that's more for the high-end medical devices. Do you think that trend is now changing? This is the next leg of growth that India could probably expect, and private equity is looking at more formidably, not only the lower-end medical devices, but maybe even high-end coming into India or indigenous manufacturing of high-end within the country?
Yeah, absolutely. We've spent a huge amount of time looking at this sector over the past decade. In my previous, I used to head healthcare for Actis before I joined Everstone, where China was a significant portion of what we did. And if you look at the Chinese medical device ecosystem, they, I would say, are probably 20 years ahead of India, right? And a lot of the import, substitution and local incentives to manufacture 25, 30 years ago have resulted in huge Chinese medtech companies across clinical diagnostics, cardiology, wound care, orthopedics, hospital consumables, etc. While India had focused largely on its homegrown pharmaceutical and domestic sectors. So, the focus, I think, has really shifted in the past 10 years. We got in very early, 6, 7 years ago, as we started to profile all of the medtech subsectors within the country and looking at the capabilities at hand. And you've seen with the emergence of several companies, a burgeoning ecosystem in India today, which is attracting a lot of private equity interest. Within cardiology, a few companies sizable companies have already emerged. I mentioned Translumina, our portfolio company, which has become the market leader now domestically in this space. But you also have companies scaling up in many other subsectors, including wound care, orthopedics, hospital consumables, vascular access, and sectors such as this. So I imagine in the next 5 to 10 years, this will become one of the hottest sectors for private equity investment. And we've already seen this with the recent acquisition of Healthium by KKR.
Okay, all right. Arjun and Puncham, thank you so much for joining us today with those insights. It was a pleasure speaking with the two of you. But with that, we'll have to wrap on this interesting discussion and take a short break. We'll come back with more news and updates on the other side. Stay tuned for that.